Happy Monday, traders. It's 8 a.m. Chicago time on Monday, the 6th of March, 2023. Thanks for joining me today on episode number 2423. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So the first thing I want to let you know about is this Thursday I will be on this public event with one of my favorite people, Jared Tendler. We're going to be talking about what's going on here. We're going to be talking about trading confidence, dealing with drawdowns. We have several scenarios that he's going to explain. That's on Thursday, March 9th at 1 p.m. 1 p.m. So be sure to join. We'll shoot you over a link when we have it. Convergence hosting this event. Convergent Trading is hosting this event. Again, we'll be talking about trading confidence, emotional capital, all that stuff. We'll be discussing it with Jared Tendler, who is just a very accomplished performance coach. Let's dive right into our pre-market summary sheet from Convergent Trading. The current stance is that we're mixed. We haven't given up much territory in the indices. Crude taking a bit of a tumble here, down almost 1.5%. So the risk posture is really mixed this morning. You can see the bonds, notes, Euro Bund are higher, but also the indices are mildly higher as well. No earnings. The main things we have to concern ourselves with this week are what's listed there. Fed Chair Jeremy Powell's testimony on Tuesday and Wednesday to the government. And then we have ADP on Wednesday, JOLTS on Wednesday, and we have the jobs report on Friday. So those are the big releases. Since it's Monday, I like to go through the top tier figures for the week. This morning, we have Canada's IV PMI coming out at 10. We have balanced trade out of Australia at 7:30 p.m. Eastern. We have balanced trade out of China at 10 p.m. And then we have an RBA rate decision at 10:30 this evening. Tomorrow, again, Fed's Chair Powell testifies at 10 a.m. This is a routine event. Wednesday, we have balanced trade out of Canada, the U.S., and then we have the Bank of Canada interest rate decision. Again, Fed's Powell at 10 a.m. And then we have the JOLTS job openings and inflation rate. Of course, we have ADP that morning as well. On Thursday, we have the Bank of Japan interest rate decision. Very important this time, as there is a changing of the guards regarding the Bank of Japan. Kuroda is on his way out. So we want to see how they tee up the next monetary moves. That's at 10 p.m. on Thursday night. On Friday, we have GDP out of Great Britain, unemployment rate out of Canada, and of course, non-farm payroll, unemployment, and productivity reports out of the U.S. at 8:30 in the morning. This is a huge figure. Expected 200,000. Remember, the prior was 517,000, far defeating the expectation, and has really set the market off on a very divergent path. Those who believe this is hot and therefore the Fed might throttle up to 50 basis points from 25 basis points, and those who believe that there will never be a recession, or there won't be a recession, not even a soft landing, and so on and so forth. And we've been stuck in this range. I'm suspecting that by Friday, we'll discover what the new trend will be. So that's what's key. You have your numbers in front of you here for today. I'm not going to go through those. I want to draw your attention to the gray box right here. Okay. So in that gray box, every Monday, we do this as a public service. Convergent Trading reports these in detail to members. There's a chart that looks at rotations. Rotations are very important for day trading. They're important in every time frame, but for day trading, We want to keep track of rotations because we want to know what the volatility is, what our reasonable stops might be, reasonable targets might be, and so on. And as a public service, we're taking a portion of that chart and we're posting it here for your consumption, even as a non-member. I know a lot of CT members are here, and we definitely appreciate you being a member and supporting us. You can see that pretty much everything went down last week. So rotation-wise, the ES dropped to 6.75. The NQ dropped, I think, from like 28 or 29 to 25.5 points. These are rotations to describe what this is. This is a 1-minute bar chart. You look at the low to the high to the next low to the high, and you're taking the value of the low to high, and then you're putting that on a histogram, on a volume profile, and you're looking at the edge of what we would consider normal, or 1 sigma of that profile comes out to 6.75. So up to 6.75 points without a single, I think 13 or 14 tick pullback, that is considered a rotation. So this tells you that if your stop is really tight in a 6.75 point range, it's likely to get triggered every time. It doesn't mean that your stop should be 7 points, although ideally, statistically speaking, that is the case, but that's too wide for me. But this tells you how to adjust your stops. Same with all these other products. We have the most popular products here: ES, NQ, RTY, YM, and CL. And they've all gone down. CL has gone down quite a bit. It used to be about 44 cents, now 25 cents. So this also is an indication historically, just not off of a study, an empirical study, but historically what I've observed is as the rotations go down, things kind of tend to be bullish. This is a lagging indicator because we're looking either 10 or 20 sessions back, and we're figuring out the statistics on that. But in general, when the market kind of has a strong or has an up move, you'll notice that the rotations kind of collapse. Same with the VIX, right? The S&P this morning, just looking at the stats, the S&P quite balanced, multi-pronged profile, but pretty balanced. 245,000 contracts traded, which is right there on top of the volume mode for all overnight sessions going back 252 days or 1 year. By the time the market opens here in about 22 minutes, we expected the mode is 280,000. We're at 246. We're pretty much tracking the mode so far for volume. What does that mean? That means that volume is in line. It's not dry. It's not high. It's in line with what we would expect. So quite normal. So that's one thing we know. Inventory is 32% long, meaning 32% of the volume has traded above the close on Friday, so the inventory is long by 32%. Nothing too great. If it gets really high, you'll notice it turns blue. And what that means is the volume has there's a lot of volume that has pushed in one direction, and we expect it to correct. Correcting 32% of 32% excess on the long side really takes one quick move on the open, because the volume on the open is so much larger than the overnight volume, right? We could trade, I think the first half hours, this is another stat. I'm throwing a lot of stats. It's a stat day. On a 20-day mean, the first half hour of trading when the market opens at 8:30 Central, 9:30 Eastern, the 20-day mean is 201,000 contracts in the first 30 minutes. That's the 20-day mean. In other words, going back and looking at the first half hour for 20 sessions back, the average is 201,000 contracts. We've got 246, 32% of that is long. You'll get my point. It doesn't take much to rebalance 32% of 246,000. That's all that means. So, but if we have 350,000, it's 99% long, then we expect a pullback an adjustment, and it's not likely to close or completely encapsulate the movement that has happened since then. The range is 22 points, which is relatively low. 22 points, 22.25 points. The point of control, however, shifting way up from where we were on Friday to 4,049. Please remember, this is the mid-century figure, the millennial figure, 4,000, mid-century figure, 4050, and then the century figure of 4,100. These are major, major strikes. And so as it trades around here, it's likely to be noisy. And that's what we've got, okay? The volume overnight has dropped to 320,000. I think it was 325,000 before, and that's it. So let's dive into the analysis here by looking at our charts. This is the RTH only. Have I lost everyone with all those stats? I'm explaining the sheet so that you can make the most out of it. So let's take a look at this. This is an RTH only. RTH for the ES is defined. RTH stands for regular trading hours. It's defined by the exchange as 9:30 a.m. to 4 p.m., which matches the equity trading hours. And what we have here in the S&P is, if you recall, Friday we were gapping higher, and we were unable to fill the gap. We opened, we tested down, and I talked about this on Friday. We tested the gap. If we cannot fill the gap in that first hour, then you want to be long. And if you are long, you're shooting for the double TPO high. That becomes your key target. That gives you about 30 points of range. So we're looking for 34 and a quarter. And the secondary beyond the 34 and a quarter that we talked about is 56. 56, which we just took. 56, 34 and a quarter right here. And we managed on Friday to really push into the 34 and a quarter, get to 50, get to the mid-century figure. And by the time I made a comment in the Convergent Trading Mavens channel stating that given that we did not poke the prior range, that the 50 was probably in play for the session, and it got to 53 on the high. This high here is 53, so it was managed to get up into 49 or so, and then we had a spike right before the close, heavy volume, a spike above the close, right before the close to 53, and then we had a little liquidity sweep or check, and it was immediately sold off, almost like a failed auction. Another word for a liquidity sweep, the classic word for a liquidity sweep is a failed auction, and it came right back in and closed near highs. Depending on your trading platform and data feed, your point of control on Friday may have stayed down at 40.17 or so. But if it's an accurate feed, it should have had the point of control should be at 40.4975, and 40.4975 is settlement and the point of control for the session. And what that tells us is, as we migrated, you could see the profile here is multi-distribution, many single prints. There are shaded areas in here, there. Pretty poor structure on the way up. In other words, it was an auction that was very aggressive, didn't really rotate or bounce upon itself. And if the point of control shifts to the top of the range, what that means is that sellers are coming in. Usually towards the end of the session, people are leveling off, covering their risk. Sellers are coming off, and so sellers are bringing in some resistance and absorbing some of the buying. The point of control shifts to the top of the range. And what's important about that, a little lesson in volume profiling, what's important about that is that now you have more fuel. So either that volume has come in and we have found our sellers and we start to move down, or we now have much more volume in the terms of sellers taking the short side or selling their position that would fuel the next leg up. And more likely than not, on a trend day up where there's initiative buying, we're initiating away from the recent balance with a point of control being at the top of the range. What's likely to happen? We don't see this in the volume profile, in the market profile, by the way. We only see it in volume profile. This is why volume profile is much more important, in my opinion, on a day-to-day basis versus market profile, which is really great for big picture. That's how I use them. What this says is it's very likely to continue. If we had done all this trading and the volume profile shows a point of control way down here at 40.17 and it runs away, this is doubtful. The run up is doubtful, and it's very likely, more likely than not, to take out the high of Friday and come right back to the point of control, versus the fact that we have fuel at the top of the range to keep us kind of pushing up. And you can see that we are in fact pushing up. The market has broken higher at about 7:10 my time. Not sure why. I scanned the news to see what's going on. I don't know. But we have taken out the 56 here, and we are opening in a gap once again. Let's take a look at this in a volume profile type of chart. See that white line here is the point of control. It's shifted up from 40.17. So if your platform shows 40.1775 or so, it's not really, you're getting aggregated data. But if you're using tick data, MBO data like Rhythmic, Sierra chart, those, Edge Pro X, that sort of thing, you're likely to have a point of control at the top of the range. And what this tells us, you don't want to short this into the reopen on Sunday night. And of course, that held true. So what we expect on a day like today, after the market has run up quite a bit, what we expect, we see that the action from Friday is what's called an impulse up. In other words, the market has moved away from where it's been balancing for the last few sessions. So let's take a look at that here for a minute. So the market's been balancing right here for quite some time, okay? And we are moving away from that balance. And if we move away from that balance, we're initiating, and usually that's pretty aggressive. And we saw the aggression on Friday, and generally we end up continuing the impulse by having either a balanced day that breaks Friday's high or a pullback and then continuation day the next session. I'm expecting today to be a balanced day. I'm expecting us to be stuck in that 40.50 area against the 40.56 right in here. So back to this chart. This is where we are right here. We went to 56 and a quarter. We went to 55.75. We held it last time. We sold off from there last time, and we are probing from below just now. And I believe that it's very likely to face some resistance and kind of hold steady here in the 50 zone. I expect that the settlement price would be tagged with a relatively high probability this morning. I'm not going to be aggressively long, although the market is pushing higher. I'm not going to be aggressively long, as I believe that it's likely to run into some resistance in the zone here. That's the kind of big picture view, a little more detail in the regular TPO chart. Let's bring that in. You can see that there's this zone in here that has been resisted, but if so, that's what's expected. That's what everybody sees. Now, the cool thing about this is that if it does in fact push and it has a high pullback like we saw on Friday, has a high pullback, it's not able to get back into the range, and it continues to push, this can give us a pretty strong continuation of the trend, because the expectation after a run up like Friday is a revaluation that is likely to get exhausted. So pretty much everybody expects it to kind of poke around, come back, and kind of sit in here. That's what mostly happens. But if it instead squeezes higher, is unable to fill this gap, and then continues higher, you're going to find people fighting this all day long, algos, whatever, fighting this all day long, and we're likely to run pretty decent. So now we're shooting up to the next gap, and don't forget that we have a double TPO high at 90.50. 90.50 is the next key target. Now, 90.50 from 40.58 is well within a day's range. Well within a day's range. So we could easily get up to 90.50. The caveats, again, is that we had an initiative day on Friday. We have poor structure from Friday. The market's run quite a ways. It's sprinted, and generally it needs to rest. Just like if you sprint up a hill, you kind of want to slow down, take your breath for the next sprint. That's the expectation of the market, that there's a lot of revaluation here. It's getting ahead of itself. So the expectation is for it to pull back. And again, I'm going to say it, if it doesn't pull back, if it holds a high flag and then starts pushing higher, it could very easily run to 90.50. And if you get on along in that situation, 90.50 becomes your key target. Okay. Then we're in the gap zone above there to 97 right up here, with 93.5 or so being our gap mid. That's the lay of the land here this morning. I know I covered a lot there, stats plus auction theory plus data feeds, but this is the information I would give my prop traders on the morning of. And I wanted to show you how this worked. Friday, immediate pullback to rebalance, immediate try to push higher, lots of collisions. So ran into offers there that absorbed the buying, tried to make an attempt to take out the low and become responsive back into the prior day's range, which was down here, and it was unable. And then once it takes out this high, now we're looking for pullbacks in this range to get long. That's the trade. The trade didn't occur down here, down here, down here, because we don't know what this thing's intention is. We expect it to be responsive still. Responsive meaning selling into the prior day's range. It is when it breaks up here, now we're trading for the pullback. We're trading for the pullback for the continuation, and that was really the key trade on Friday. This morning, we want to see, how does it open? Does it come back into the range and fill the settlement price? And if it does it come out of come through the Friday high 53 and continue higher, or does it struggle and try to correct some of these single prints that you see below? So today, hands off for the first 15-20 minutes, and then from there we need to ask ourselves which side is stronger, and we want to wait for setups from that side. I'll leave you with that. Good luck, and I'll catch you tomorrow. Don't forget to block off time at 1 p.m. Eastern on Thursday, March 9th. We'll be talking to Jared Tendler about trading confidence, recovering from a drawdown, or not seeing results for a period of time that your confidence is getting hit a little bit. What strategies you can use to help in that regard. Good luck, and I'll catch you tomorrow morning. Take care.